Sajiv Dhawan, Managing Director of JV Capital Services, joins us live from New Delhi. Sajiv, morning. Thank you for joining us. Sajiv, in times of global uncertainty, when hedge fund managers and money managers are in a risk-off mode and they're throwing just about everything and anything, starting from bonds to emerging market equities to developed market equities, what's been your portfolio strategy? What are you advising your clients?
Morning, Nikunj. Well, I'm afraid we've been very, very quiet, and I think a lot of people have been over the last several months. We've maintained over the last 1 year or so that the European situation is not going to go away by throwing money at the system. That was never going to be a long-lasting solution. There's a complete crisis of confidence. You have to restore that businessman's confidence abroad, and it's not happening. The Greece situation, what is happening now, was only being delayed by the policy measures in Europe. You've clearly seen the effect locally. Foreign investors domestically are fed up because the government's inaction to create any significant policy, with the rupee at 54, heading towards 56, 57 maybe. They will all wait. I mean, any investor who may have put all his money in Hindustan Lever from if he was an FI would have lost the same amount or a significant amount in the exchange rate. And while individual stocks do perform well, the general sentiment is so poor that on any buying or significant rally in the markets, unfortunately, as a trader, I would still look to short sell on any significant rally. As an investor, the best one could do is probably accumulate. But again, if the Nifty rallied to 5100, 5200, or for some sort of relief, then again, I would look to take profits or initiate fresh short positions.
Sajiv, how are you reading into the developments with Greece right now? And could we see a 2008-like contagion actually being repeated?
Morning, Aisha. I don't think it'll be as bad as that, because that was an unexpected thing which came suddenly, and it multiplied and just spread like wildfire at that time. I think this time, if Greece leaves the euro, a lot of that negative news has already been reflected in currencies and in the stock markets, and the markets are sort of preparing for the worst. There might be another knee-jerk reaction of 2 to 5% if Greece does leave the eurozone. The concerns will then move on to Spain and maybe Italy and Portugal. And it's very difficult to predict. That's the problem. When in a period of uncertainty, markets will find it very difficult to go up. That's always been the problem. If it all blew over and Greece left, Spain left, Portugal left, let's have that 10%, 20% capitulation and crash in the markets globally. At least that's the base where we can restart and say, okay, this is what's the new situation. This is the new world economy. Let's deal with it. Let's see which companies come out on top. So the problem is more uncertainty than Greece alone. And until we have that sort of calm in the markets, it's difficult to see foreign funds resuming. It's difficult to see domestic sentiment improving. And the India shining story has clearly been over for the last 1 year. And it'll take a lot of effort by the government to restore that.
I guess right now the biggest risk is that if Greece eventually goes out of EU in a disorderly manner, what will happen to global risk premium and global liquidity equilibrium if that has to happen. But let's discuss stocks. Tata Motors corrected on Wednesday, corrected on strong volumes, and in quick time Tata Motors now has cracked from levels of 330 to 270. Sajiv, do you think yesterday's decline in Tata Motors is a good time to accumulate? Because as of now, JLR sales are looking strong. Yes, what they reported for the month of April was not all that strong, but that could be a blip.
Well, look, Tata Motors had a great run, and a lot of people have obviously made a lot of money on that particular stock. And yes, I agree, after the recent fall, we would actually look to buy the DBR at around 150 to 140. We liked it when it was 120. It moved up to, I think, 180, 190 sort of levels. Our target then was 160, 170. So it's come back almost into our buy zone of 140 to 150. Tata Motors now is more of a global play than a domestic story. And if you want to hedge your portfolio in a good auto stock with a good play on the European situation recovering or stabilizing, then Tata Motors is probably the best pick. So at 140 would be the ideal price. At the current price, maybe you could start accumulating. But again, if the stock moved up 10, 15% from the current levels for whatever reasons over the next few months, we would certainly look to take some profits again.
If you are nervous, if you believe that global uncertainty is here to stay, global economic condition has been weak, why buy a company which is dependent on global economic growth? Because US consumers are exhausted and European consumers are confused.
You're going to have to take some call on some contrarian call if you want to try and make some money in the markets, Nikunj. And when things, like I said now, I think a lot of the bad news has been factored in. Yes, we could see the Nifty slip to 4,800, 4,700. Our own clients say when the Nifty hits 4,800, we'll start to buy. I don't think you should be so rigid in the Nifty levels. You should look at individual stocks. And as I said, from our perspective, at 140, 150, Tata Motors looks like a decent buy. At 370, 380, Tata Steel looks like a decent stock. Mahindra at 600. So you have to have your own individual targets. Only time will tell whether those decisions will be right or wrong. But I think a little bit of exposure at the current time is fine. I'm not saying if you have 100 rupees, go and put 80 rupees in Tata Motors, but 5 or 10 is fine. The point being, the time to be leveraged is clearly not there. The time to take high risks bets is clearly not there. The time to even probably buy options for the next month probably is still not there because the market sentiment is still pretty weak. But accumulating slowly, solid blue chips, these are the stocks that will bounce back when FI buying resumes. And that's obviously if it resumes, and that will happen, I think, maybe in the next few months, once the worst of the rupee fall is finally over.
Why is BPCL outperforming not only the OMC basket, but it is also outperforming major averages?
I think there's some news, Nikunj, on BPCL and some discovery in Mozambique, which is again a sentiment booster. But apart from that, really, I don't know whether oil marketing companies, they're great companies, but they've obviously got their problems with the subsidy. There's likely to be a hike in oil prices and petrol prices over the next couple of weeks. But I think BPCL, basically because of this news flow, is just outperforming in the short term. But otherwise, I think all these stocks will continue, frankly, to move depending on oil prices and the government's policy decisions if they finally do decontrol diesel prices.
Do you sense that, the RBI at this point in time has limited room to stem the rupee slide?
Well, actually, there's not much they can do. I mean, they can keep selling dollars, but it's not going to help. They're making measures to try to bring in currency from the exporters on a quicker basis. They're trying to curb speculation. But it's a problem which was bad a few months ago, and it's got even worse over the last 1 or 2 weeks. And really, there's not much they can do. There will always be a run one way or the other when people get nervous and panicky. And our contention was, the first time it broke 50, went to 53, came back. We said, okay, that's not bad. But had it broken 52 again, then the call was it could even move to 55, 56. But the pace at which it has gone is quite unnerving. And it'll be a disaster for corporates who have already had some problems with repaying some of their foreign borrowings. And if it continues to weaken like it is, then there could be some serious problems. And the RBI, frankly, cannot do much. There's the government that has to restore confidence in the country. Small inflows from NRIs or investors trying to get 9% in a bank fixed deposit is just not enough. There's too much money going out and just not enough coming in. So the RBI, I'm afraid, is fighting a losing battle if it's going to try and throw dollars or sell dollars to control the fall in the rupee.
Sajiv, so in the mid-cap space, where do you mind there is a deep value argument?
I don't know about deep value, Nikunj. Last year we had a stock called Stride Zakalab where we said there were some good investors. That stock's more than doubled. I think this year I would look to accumulate a stock called Gujarat Fluorochemicals. Again, it's fundamentally a decent company, but again, you've got to look at stocks where there's some inherent strength, and I think the investors who are owning the stock are strong hands and they're not going to panic. So that could be one stock in the mid-cap sector which investors and traders could look to accumulate. But again, as always, do your own research and have stop losses in. These stocks do take some time to perform, but when they move, they can give you very decent returns and certainly outperform the market on the upside.
Sajiv, a quick take on Bajaj Auto, and what is it that you're expecting from this one, considering it's got earnings slated today?
I don't think I share anything too exciting will be expected. Again, with the interest rates slightly coming down, it's not going to have too much of an impact. The big problem is that what happens to the growth going forward domestically. The two-wheelers have had a great run over the last couple of years, but you've even seen Hero Corp slip off. Bajaj, I think these companies, valuation-wise, they're okay as a play on the Indian growth story. They're good stocks, but again, I think a lot of the positive news has been factored in, and if the results are positive and there's a significant rally, my temptation would actually be to take profits rather than go aggressively long. And until the domestic climate eases out, I think all these highly priced stocks are susceptible to selling by foreign institutions or large institutions in case the markets get worse. I don't expect anything disappointing, but for the next 3 to 6 months, it's difficult to see these stocks moving up by more than the market by the market performance generally.
Why is ICICI Bank underperforming first HDFC Bank and now Axis Bank?
I think all the banks in Nikunj are facing problems. The Moody's downgrades, I think they're just more these companies being overcautious in case something gets worse. But the real fear is a lot of repayments from corporates are going to happen over the next several months. If the rupee continues like this, if the economy continues like this, again, concerns of non-performing assets will go up. And that, I think, will affect more the PSU banks, frankly, than the private sector. So for me, if the bank nifty, ICICI Bank slip another 4 or 5%, then again I think you've got to be a bit contrarian and start to buy again, because again I feel that most of that bad news would have been factored in. So if you're getting ICICI Bank maybe around 750 to 770, I think the risk reward would certainly favor investors to start to accumulate at that sort of level again.
Where is value in the banking space? Are you at these levels a contra buyer in any of the large or mid-cap PSU banks?
Well, Nikunj, I personally like to accumulate the bank nifty. I think that's the lowest risk. It moves up quite sharply. You can get 5 to 10% sort of upsides if you accumulate in a systematic way. You're not going to outperform the individual banking stocks, but I think that's a good base. And State Bank of India at 1750, 1800, again, looks to me a decent buy. Bank of India at the current price is okay. Bank of Baroda, which you've mentioned, has been absolutely battered and halved in price over the last 1 year. So again, some of these stocks look attractive, but you need the big money flows, frankly, to come in to these stocks to drive these stocks up by more than 10-20%. So for me, I would actually at the moment stick to the bank nifty, start accumulating in a phased, staggered manner between 8,000 and 9,000 on the bank nifty. And when sentiment turns, which it surely will, whether that's 3 months or 6 months, you'll probably see the bank nifty again around 10,000 or 11,000 plus, and you should have a decent 15 to 20% upside.